Financial conditions are supportive, economic conditions are supportive. What will stop this, if anything?
Well, you've got a lot of earnings support too. So fourth quarter earnings are going to be coming out over the course of the next 2 weeks. Analysts have been upping their estimates along with very strong guidance that you've got from companies. Earnings revisions are up, and it doesn't seem as though there's going to be much. I think what's going on right now and what we see in the data that we look at has been that there was a rotation somewhat out of equities into safer haven assets in December and even through the first week of this year. But we see that there's going to be probably a very big catch-up trade because positioning is really not on the side of markets going higher just yet.
So if we are watching flows for clues or for indicators, which asset classes would you be watching?
We watch very carefully the big flows between equities and fixed income. And over the first couple of weeks of this year, you've seen money being redeemed out of equity funds and into bond funds, which is very unusual for such strong equity markets.
And that's the thing, because many analysts say that it's in bonds where we might see a sell-off trigger. So are you concerned that those flows might trigger the trigger?
No, not necessarily. You need a couple of things going in that way. So at Voya, we look at valuations, fundamentals, and sentiment. Sentiment is just one of them. And when we take a look at the underlying fundamentals, they're so strong at this point. You've got consumer confidence at high levels, retail sales have been very strong, and it looks like the tax program is also going to give businesses an opportunity as well. In terms of the inflation data, which I think is what everybody is really concerned about at this point, we see that inflation will start to creep a little bit higher because of the anniversarying effects of the wireless bills that you had in March of last year. However, it's going to be very difficult to mount a sustainable, strong rally past the Fed's 2% mark on core personal consumption expenditures. So we think that this rally probably has quite a bit of legs.